Friday, June 27th, and I got, to quote Frank Costanza on Festivus, I got some problems with you people. Not with you people, just certain people. I got some complaints yesterday about the podcast being an entire ad for tools. Let's just go over, if you listen to the podcast, okay, about the entire podcast being a tool. On Monday, I suggested, hey, during this time, Carnival Cruise Lines looks really good. It looks fantastic. And it was selling on Monday at $23, okay? I said during their earnings, I think their earnings are tomorrow, and it was Tuesday, but I think it's good. Boom, 13%. So if you were listening, not a tool, just gave you a stock pick right there. And let's go to Tuesday. Tuesday, I said, hey, DPST, while scanning the stocks for bullish sentiment, I said DPST has a buy in the 4-hour algorithm. I like this one because regional banks haven't moved like the big banks have. So I like this. It's a triple leveraged ETF. Be careful. Trade it. Trade it if you want. We're selling for 74. Today, it's at 88. Boom, 14%. I also suggested Micron. Okay, I said, hey, Micron's a trade around their earnings. Micron had their earnings yesterday, and it was down, but it went up. Boom, I showed you yesterday the chart. It was a nice move. Wednesday, I pointed out that on Tuesday, I went in here and I said, top stocks on Seeking Alpha. Again, this is a tool. I'm not trying to sell it to you. I'm just telling you what I use, and you can use it too. But SECL, I said, oh, this one, I said, hey, I don't like it. But boom, Wednesday, Tuesday I went over it. Wednesday I said it's interesting because it was up. Boom, 5 days you're up 15%. It was up 10%. It was trading up another 6% yesterday, and it's up in the pre-market. I also mentioned on Wednesday, Poet. Okay, and yesterday was Thursday. You were up 7.5%. And I mentioned that I liked it because I found it in the strong buys. So again, I'm just using the tools that I suggest to people to have. If you have your own tools, that's fine. But again, the Micron trade Thursday, you could have gotten out Wednesday afternoon because it lost confirmation. So understanding how to trade, that's what the newsletter education section is about. So if you're going to listen to the podcast and you haven't read the education section and you don't know what I'm talking about, you're not listening. Because one of the other things that I brought up was HIMZ. And I said, hey, any reaction in the market is an overreaction. And so the 65-minute algorithm that you can get with TrendSpider got you in yesterday at $16.99. Okay, $16.99. Where are you trading today? $19. $19. That's a nice 10% move. And you go over here and you look at HIMZ. Boy, it was up, what, 22% yesterday? Any reaction in the market is an overreaction. Now, where do I get these ideas? I get them. The first one, I showed you, Seeking Alpha Premium. And you get a free 7-day trial. So yes, I'm hawking this. Do I need your money? No, go buy it on your own. You won't save money, but go buy it on your own. And if you've got a tool that's this good, go and use it. The top second half stocks of 2025, we just had that presentation last week. It is outperforming the market. Yesterday alone, the entire portfolio, you can see it right here on the left, 3.45% gain. Okay, go and get the free 7-day trial. Go and find the 2025 stocks, add them to your portfolio. They have this particular group of stocks, the top 2025 stocks, the top 2024 stocks, the top 2023 stocks. They have all outperformed. It's a great, great tool. So how do you get it? You go over to Linktree and you can get the bundle. The bundle has alpha picks. AlphaPix yesterday has recovered from its underperforming in the short term. Again, I said for the first half of the year, they're underperforming. I asked Steve Kress why, and he answered with a full-ass newsletter that said, hey, small caps will underperform, but you will see them outperform in the recovery. So over 1 month, 3 month, 6 month, and year to date, now AlphaPix is outperforming the S&P. And this is a little bit dated, but as of yesterday, AlphaPix was up 172%, while the S&P is up 60%. So you can think about this way. You can go buy VOO, okay? And it's perfectly fine, and you can have doubts about this portfolio, and you know, again, buying VOO and chill is perfectly fine, and the numbers are back there, but the backtest performance of AlphaPix is there, and I'm starting to believe in it. I've got 6 figures in this one. So VOO, you can say, well, I can buy it for free. No, there's an expense that comes with VOO. Okay, so depending how much money you put into these ETFs, you're actually paying for them. And here you go. Okay, $399. If you've got $100,000 into VOO and you're getting 60% and you're perfectly happy, that's fine. But you could only pay $399 and get triple your return in seeking out in the AlphaPix. Okay, and the bundle is where you get the savings. Now, say you don't want the AlphaPix portfolio. You can get the free 7-day trial. You can get these top second half stocks with a free 7-day trial. So there is nothing that I'm hawking here. There is nothing that I'm pushing. Literally, I'm trying to tell you, I manage my portfolio really, really well. And I use these tools every freaking day. And then you're going to see me use charts. And I use charts all the time, okay? I use charts all the time. Well, that's in TrendSpider, and they just started their 4th of July sale, okay? You sign up for an annual plan, and you'll get my 4-hour algorithm. You get all the tools that I've customized in this tool of TrendSpider. Took me months and years to develop these tools. So if you use my link, you can do it, but it's on sale now. And I always point people, if it's within your budget, to go for the top tier. And the reason I tell you to go for the top tier is because if you don't know what you're doing, this has 52 trainings per year at the top tier, and you're saving 50%. It's a great, great offer. This is their best offer. So again, if you're pissed off that I'm pointing these things out to you, and you're not taking action on the trades, why the hell are you listening? Why are you listening? Just quiet quit. That's the way to do it. Quiet quit. And if you don't think that charts have a place in this world, go and watch this little Instagram clip. I will put it in the newsletter today. It's all about random chaos. And stock charts follow random chaos. It's basically a tool where they have the equal weight of these bullets, these little like pebbles. And what happens when you put it in? Every single time it follows an order. And you can see that little bell chart right there. Every single time a stock chart follows an order. It's just nature. It is just nature. And so when we follow order, what do we want to look at? We want to look at the historical patterns. I brought it up, okay? That July is a very strong month for QQQ. Ryan is bringing up that the S&P has gained in July for an incredible 10 years in a row. One more, and it ties the longest win streak in history. And I brought up that QQQ, over the past 20 years, I think, let's go back to 2010. I mean, we'll just go back to January 2010 and we'll look. 93% of the time, the Qs are up and their mean change is 4.21. Well, how do you do this? You go in and you say, well, let's do a triple leveraged ETF. And we did this last year. And you can see, if you look at this, again, July up 93% of the time. The mean change is 12.43%. Now, these aren't this triple leveraged ETF isn't one that you want to buy and hold. You want to watch it. So maybe you go from monthly to weekly. And you can see we're currently in this week. The next 2 weeks are some of the best of the year for TQQQ. And if you're not comfortable because the Qs are at their all-time high, maybe you go for UPRO, okay, which is a leveraged ETF on the S&P. And we can go and look at the weekly on this one. Again, some of the best weeks of the year, with the following week after July 4th being up 93% of the time, with a mean change of 4% in a week. That's really good. So again, the best advantage is to try and take care of the back testing of this stuff. The back testing is what's key. So I'm just trying to give you ideas. Now, maybe you go and you say, well, the advisors have the best ideas out there. Well, Oliver here says Substack has better investment advice than most Wall Street analysts. Retail investors are winning. Oscar, huge win. NBIS, I brought it up many times. Lemonade, it's an insurance company. I've traded it. I don't bring it up much, but it's up huge. HIMZ, I've been bringing up all the time. TMDS, it's a stock that I went over that Perplexity said could turn $5,000 into $1 million. So why else do you want to be on Substack? Well, this particular article by the Oracle, this guy goes into Polymarket and prediction markets and how he made $300,000 betting on the New York City mayor's race. And this may be the next portion of investment. It's a prediction market. So again, why else? One other reason you want to be on Substack is because when you sign up for my newsletter before July 4th, you get entered to win a year of TrendSpider. A year. So again, you can sign up for my free newsletter. You can read this Polymarket thing on the newsletter. You can see all the things that I go over here on the podcast in the newsletter, everything. But let's talk about the taco trade, because July 9th is when these the trade deadlines are set to be extended. Okay? They're either extended or we go back into tariffs. And so I've been bringing up, hey, we have to, you have to look at July 9th. Well, July 9th is turning out to be a bit of nothing. And maybe it's even bullish. Again, the week after July 4th is the most positive historically. Well, the U.S. and China finalized their trade deal. White House eyes agreement with 10 key partners, Commerce Secretary says. They have been going over this. They don't want to crash the market. They don't. And they are signaling that July 9th just may be the most bullish time because he has to sign an order. Literally, it's written in the executive order that we go back to the old tariffs. And if he signs an order to extend it, you're going to have a news catalyst. So there's going to be that. Then what's the next big catalyst? Well, it's going to be earnings. And I have a hypothesis about this, and I am way too dumb to talk about this. Trust me, I don't understand it at all. But the weak US dollar is going to be a catalyst for earnings. And you kind of saw that in Nike last night, okay? I am way too dumb to explain the weak dollar. Go and have a conversation with Perplexity about it. I'm not even going to try it, but 40% of the US's S&P earnings are from international dollars, and a weak dollar actually helps that. And during the last earnings, you had a strong dollar based on the tariff war. So we may be seeing, again, Nike jumped 10%. They signaled we're seeing a bottom. That's a big tariff company. So it may have started something. Okay, Toyota Motors, after the automaker reported its 5th straight monthly increase. Are autos doing well? Maybe. But again, it looks like it's bullish. And I'll bring up yesterday's Micron. Okay, I want to bring up because NVIDIA appears on track to reach another all-time high today as chip stocks rally. And yes, they're up in pre-market again. But this particular quote in here hit me. Micron generated $9.3 billion in revenue in the third quarter, showing 37% year-over-year growth, due chiefly to ramp of company's new high bandwidth memory products. Micron has laid out ambitious CapEx programs in order to support all of their stuff, blah, blah, blah. I don't even know what that means. But when you look at the Micron chart, okay, the earnings were good. And I'm going to bring up a 5-minute chart of pre-market when they announced their earnings, and we saw that pop. And you can see clearly, I said, hey, the CEO is going to be on CNBC. Boom. You could have made 4% in a couple of hours. And that's a good move in a stock like Micron. That is quality. But what did you see over the day? You saw a weakening chip. And it's because it was up so much into earnings. This one just shot up into earnings. So those earnings were priced in. And it's a little too much. The stock was flattened down. A key insight for me was the CapEx commitment to $200 billion into U.S. fabs, which is bullish for Micron's growth in particular because capacity may become an issue. They are sold out. But again, does this signal maybe the chip trade, even NVIDIA, may be coming up on a nice little pullback? So maybe you want to look at that. Again, all-time highs, I look to trim. But I've got super confirmation here in NVIDIA. And in fact, their average Wall Street price target, we can go and look at NVIDIA's average Wall Street price target. It's 173. 173. So maybe we still have more room to run. While I have confirmation, I'm not trimming it. I'm looking at this one and saying, hey, I've got confirmation. Do I want to trim it? No. I will wait until we pull back to about 153, 154, and then look at trimming it when I lose confirmation. If you don't know what confirmation is, again, it's in the education section right down there. So my podcast isn't about me just shilling stuff. It's here. It's there. I have made you money. One other one, let's just bring up Amazon. They could see billions of dollars in extra revenue if they just hike Prime membership. Are you getting rid of your Amazon Prime? Probably not. The quant has this as a strong buy, and it has for a while. Wall Street thinks that it's worth $241. That's 9% upside. But if they raise their prices, that's a game changer. Because if they raise their Prime membership fee, it's a Costco model. And Costco is trading. I mean, let's just go and look at Costco. Costco fundamentals, they are trading at 54 times forward earnings. Okay, and they're not a tech company. Amazon is trading at 34 times forward earnings, and they are a tech company. So I would argue that Amazon is the best investment out there in the market today. I like it. It is part of my top 5 in my personal holdings. And I will argue, again, seasonally, July isn't just for Prime Day, it's for Amazon's favorite month. Amazon, 20-year seasonality, 75% win rate. It's not as good as TQQ. Average return, 6.18. Maybe you want to do a leveraged ETF on that one because seasonally it's good and we're in a bullish market. Now, I've often said that $3 trillion companies can't move to $4 trillion companies. But Wedbush, they're saying NVIDIA and Microsoft are likely to hit $4 trillion this year. Microsoft right now, 3.7. That's huge. NVIDIA, same thing, 3.7. So it's a nice 10% move to get to $4 trillion. It's not that far off. And both of these stocks are huge gainers. Okay, and another one. And this is all leading us, by the way, into ETFs. But Meta gets a meaty price target of $812. $812. Again, let me reiterate. The price target from one analyst on Meta is $812. Does it mean it's going to get there next week? Probably not. You're trading at $730. But if you didn't buy Meta at $521 when the 4-hour algorithm said, hey, I think you should buy this, and it's got a 52% win rate, I loaded up on this one. I loaded 6 figures into Meta. They are a cash printing machine. I like it. And this particular analyst has the dollars and the numbers that puts them at $812. That's an upside of 14%. The stock to date is up 22% this year, while the S&P is up 3.6%. So all of that's leading me to let's take a look at some ETFs. And one ETF that I look at, Vanguard Mega Cap Growth, MGK. I don't own this one. Okay, we can look at the holdings of this one. It's Microsoft, Nvidia, Apple, Amazon, Broadcom, Meta. It is pretty much like QQQ. And let me see if I go back, if it pulls up. Yeah, okay, there we go. So MGK versus MAGS. What's MAGS? It's the Mag 7. It's an equal weight. And they basically own the same amount of stock in all 7 stocks. And then I've got VOO and QQQ here. So here are some interesting things that I see in this. Year to date, QQQ is beating all of them. I own a large amount of QQQ, so I'm perfectly fine. Shortly behind that is MGK. But Mag 7 is lagging. So I just went over Nvidia, Microsoft, Amazon, Meta. There's 4 of the Mag 7, and they're lagging behind. Over 1 year, MAGS is almost double the others. Okay? Almost double the other. MAGS. Almost double the others. And it hasn't even lasted that long. Because when you go out to 3 years, MAGS is irrelevant because it just started back here in 2023. And it's up more than the others. But you can say MGK beats the others. But QQQ is hanging right by there. In 5 years, they're all kind of lumped together per se. But when you go out 10 years, that's when you really see the difference, because MGK right back here, they all started at the same point. In 10 years, MGK is up 333%, but QQQ is at 405%. Meanwhile, VOO is up 198%. Yes, you have to live with volatility of QQQ. But I'd point that out, that, hey, in ETFs, you can do very, very well, even if the top ones are the Mag 7. Now, I went over and I said, let's look at SPMO. This is a momentum ETF, okay? And I know it says BUZZ up here, but if we go and look at SPMO, it is a momentum ETF. And it's a very good momentum ETF. It's holdings: Nvidia, Meta, Amazon, Broadcom, JP Morgan, Tesla, Walmart, Netflix, Palantir, Costco. 101 holdings total. Okay, so I said, let's look at SPMO. Then I want to, which is momentum. Then I want to add in BUZZ, which is social sentiment ETF. And if we go and look at BUZZ and we look at the holdings, it's Coinbase, it's ASTS, it's Advanced Micro, it's Rocket Labs, it's Robinhood, it's SoFi, it's Supermicro, it's Nvidia, it's GameStop, it's Palantir. It's got 76 holdings. It's based on social sentiment. And so let's look at BUZZ year to date. It's up 20%. SPMO, the momentum is up 17%. So social and momentum are almost tripling QQQ and VOO. You go out 1 year. And again, the social is up 41%. Momentum's only up 26%, but the Qs are up 13%. So it's social and momentum that are driving the market. 3 years, social and momentum are outperforming. So what's the clear thought process here? Social and momentum are driving this bull market. Does it look at valuations? No. Social and momentum are driving the market. So I just like to put that out there. And again, these ETFs are out there for you. Now I want to show you the Nike chart because Nike yesterday reported, but it didn't start going up until after they started the phone call. Okay? The initial earnings were out. And then what happened? The CFO kind of said, hey, we're bottomed. And it just continued up. And the market is open and you can see it continuing to rise. Social and momentum. This is an expensive stock. Now, would I be buying this? No. And the reason I wouldn't be buying this is because you still haven't broken that weekly time frame. Okay, that downward trend is still there. So you haven't broken this trend line. Once you start breaking that trend line, then I think you start to look at this because it's still an expensive stock. The chart tells the story. Until a trend changes, I don't want to go on a wild ride of lower highs and lower lows. There are too many good things in this market. But again, social and momentum are the things to look at. Does Nike have a social? No. Nobody's talking about Nike. Everybody's talking about Hoka's and On. They're not talking about Nike. Do they have momentum? No, clearly not. So something to keep an eye on in the future is this process called tokenization, okay? And this is from the Compound. Tokenization is going to transform the world. ETFs revolutionized money management and mutual funds, and we know how they did that. And ETFs and mutual funds, they revolutionized single stock holdings. So tokenization is the next thing. And tokenization is going to move us to 24/7 trading. And so where do you find tokenization? Well, it's crypto. It came from crypto. What are the best crypto stocks right now? They go over all of this. Okay, so these are Seeking Alpha analysts who tell you, hey, Circle, Coin, MicroStrategy, USD, MSTR, Mara. Again, there are crypto out there, and it's not all equal. But tokenization and crypto is moving this market. And I argue here, Coinbase has just gone parabolic. And if you look at Coinbase in the 4-hour algorithm, it got you in here at 256. You're at 365 very shortly after. Okay, this is a great company, great stock, but it's expensive. And when you see rips like this, what happens? Let's go back to that Instagram post where you saw a controlled chaos and you saw it down. Well, listen, for me, when you see that type of move, there's only one choice, and it's not to buy at the highs, but it's to buy an inverse ETF. And CONI set an alert for it. Because at some point in time, this is a double short on Coinbase. You do not hold this. You absolutely do not hold this. But you go and you set an alert and you say, hey, that a reaction on Coinbase to the legislation that's out there, to the future of crypto, it's overrun and it's going to come back. Well, how do I make money when it comes back? A leveraged inverse ETF. Now, today, I'm not doing scans today. And the reason I'm not doing scans, it's a Friday. I typically don't say buy anything on a Friday. But you're seeing HIMZ, HIMZ. This one is up 11%. Again, it's made the turn. The 65-minute algorithm, you're trading right now at $20. 65-minute algorithm got you in at $16.99. So again, if you're listening to me and you're pissed off that I go over these sales on Linktree, where you can get TrendSpider, you can save almost $1,000, where you can get the bundle of premium and alpha picks, and you can outperform, again, you're not listening. And if you want to take away the free stuff, that's fine. But you may be listening for the 100th or 500th time. There may be somebody out there who's brand new and this is the first time they're listening and they don't know what they're doing and they don't know the tools to get. Well, I've got tools and they have made me a lot of money. So all I'm trying to do is bring you that. Do I need your money? No. Like I said, go and buy these outside of my links. I don't care. I don't care. I don't need your money. But understand, I just want to provide you the structure that is a supportive and successful investment career. And that includes journaling. That includes finding tools that work for you, whether they're paid or free. So before you start complaining, just understand that's my goal. And if I'm not for you, then stop listening. So I think I did a good enough job. I'm signing off for the week. My Apple is up 0.56. It's holding above 200. I'm perfectly happy. Some of the stocks that are in the top 2025 and second half, they're running again today. So again, I really, really enjoyed the fact that I get to do this podcast. I like the people listening. I like the positivity. But if you're going to be negative, just get the fuck out. I mean, honest to God, just get the fuck out. I don't have time to deal with negativity. I got too many other things going on. Hopefully that works for you guys. It was a half-hour podcast. Nice, quick one to wrap up the week. I hope you have a great weekend. Take care. I will talk to you Monday. See you. Bye.
Every morning I wake up to the sound of the trading bell, my heart starts to pound.